Gold is up and down, but what's the story here? Phil Carr from the Gold and Silver Club is here to tell us more. Phil, gold has had little traction and it's at a 2-week low. What caused this drop?
If we have a look at the gold chart, gold is trading at $1,277 per ounce, which is down 6% since touching one-year highs at $1,357 on September the 8th. To a large degree, this has been due to the rebound in the US dollar on expectations that the Federal Reserve will boost interest rates in December. Certainly today, gold is trading very near to the September lows. It still looks vulnerable here as we trade back towards key support at $1,270 per ounce. Stocks are continuing to trade near record highs, removing some of the demand for gold right now, and geopolitics for the time being has faded into the background, so we're not currently seeing gold get the safe haven bid. In terms of the next major levels here on gold, currently investors are awaiting news on the new head of the US Central Bank. The hawkish speculation about a new Fed chair has added to this downward pressure and has certainly provided support to the US dollar. President Donald Trump told reporters on Monday he is very, very close to making his decision on who should chair the Federal Reserve. A hawkish candidate would be expected to favour higher interest rates, boosting the value of the dollar and of course making gold denominated in US dollars vulnerable to more downside.
According to opposition leaders, Venezuela did a swap of $1.7 billion worth of gold with German Deutsche Bank for a $1.2 billion loan. Was this a good move on behalf of Venezuela?
I would suggest that the Venezuelan government could have negotiated a better deal here. By allowing the contract to lapse, they haven't given themselves any room for manoeuvre here. The contract's expiration does weaken their international reserves, which is hovering near 21-year lows, and it certainly weakens the balance sheet of Venezuela's central bank.
Now, Steve Wozniak, he believes that gold will be overthrown by Bitcoin. What's your view on this?
Well, 2017 has certainly been an explosive year for the cryptocurrencies. If we take a look at Bitcoin, which broke out to all-time highs just last week, breaching above $6,000, it has increased more than 5 times its value since January. We've already seen savers and investors across the world flock into cryptocurrencies this year rather than gold as a source of financial stability, and also this year as a safe haven during periods of geopolitical risk. If you compare the performance of gold this year to Bitcoin, there's no real comparison there, with gold currently up 11% on the year and of course Bitcoin up now over 500% in 2017. However, there will always be a place for gold here as a safe haven, as a very tangible way to store your wealth. And whilst Bitcoin has had some incredible gains over the course of this year so far, it is currently a much more volatile asset class, and those who hold it and those who trade it need to be aware of the day-to-day volatility of this market. We saw that very clearly at the end of August, where Bitcoin broke down from $5,000 to $3,000 within the space of 2 weeks. So if you are investing, you need to be aware of the current volatility of these markets. Every decade is defined by one bull market. In the 90s, it was the tech stocks. In the 2000s, it was gold and silver. And certainly so far, 2017 belongs to the cryptocurrencies.
Well, that was Phil Carr from the Gold and Silver Club with some fabulous charts. I'm Kaz Cahill, and goodbye for now.